The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach do we go, dear friends. And as always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Anyway, big day, off 3.5 on the S&P cash. The Nasdaq's off let's call it $1.30. Crude oil up $1, and of course we had a huge move in gold. I think last I looked, it was up $16. So maybe it has found a floor in here. We'll find out Monday. I was hoping that it would actually dip back down, maybe to 1260 or so, and give a false breakout or breakdown. Haven't gotten that so far, but we shall see. Still in the triangle, so it hasn't broken up to the upside. So we'll see. But I'm kind of thinking that if it does break out here, that's a kind of a counterfactual move. But weirder things have happened. So we've got a market that really ran yesterday. The options were pointing to a higher expiration point. Yesterday, the option market makers saw their fortunes improve by about $10 billion. Every point higher in the S&P overall in the options market was worth about $200 million, about the same today. So, there's always a bias to kind of push this thing at the end of the day. Maybe all the push came in yesterday. There's just nothing left. Little sell the news on the tax bill front. Dow's really the weak sister out here, off 90 points. But, of course, with only 30 stocks, it only takes a couple to really have that not outperform. What would be the opposite of perform? Anyway, it's down. Maybe that's all I need to say. Who's my main squeeze? Well, so what else do we have that I want to talk about today? Well, that was kind of it. Options still would say a little higher for the day, and if the option guys can move this market in the last 30 minutes, as I said, every point higher that they get, you get 3-4 points down, like giving back another $500 million. But at least they're $9 billion better off than they were going in on Wednesday morning. So not a lot happening. Going to be kind of different. Now, next expiration in December is quad witching, so we'll probably see a lot more volatility in that. I thought that they tried to push this market. They kind of did a few times. I don't think there's a lot of appetite to go in for a second day of pushing this market. But I thought we'd probably hit 2,600 on the S&P cash. If not today, then probably Monday. The earnings, at least last couple of days, including retail, which has been the weak sister, is starting to see some action. We'll get into that today. We'll be with Tom O'Brien at 3:30 to talk technology. Got a lot of interesting stuff happening this week. And what else do we have? Yeah, they were selling a lot of puts. Somebody in the den is saying that they were selling puts on Wednesday. That kind of gets, they're always selling arms to the weak side so that the war continues. But that's the business of option market makers. So that's it. Why don't we get to a little bit of history?
And it's all just a little bit of history repeating.
On this day in 1970, Douglas Engelbart receives a U.S. patent for his XY position indicator for a display system. more commonly known as the computer mouse. Engelbart calls his device a mouse because the cord looked like a tail. The mouse was first prototyped in 1964, but wasn't demoed until 1968 and was not included with a commercial computer until the Xerox 8010 Star Information System in 1981. Apple bought the first mouse to a personal computer with the Lisa in 1983. However, the mouse did not become ubiquitous until 1984 when the Apple Macintosh popularized the device. And of course, there's a lot of fanboys. Apple people don't tend to be really into technology. They kind of like it when it works, but not into it. Kind of like people that like cars that run, but don't build their motors up and go race them at the track. They tend to be the tourists of the technology. But always interesting to run into Apple people that tell everybody that the mouse was invented by Apple when the patent kind of precedes that before Mr. Jobs was even out of high school. But what else do we have in this? I've talked about it before. Kind of interesting to see that everything that we commonly use today was put together by Douglas Engelbart in that 1965 to 1968 area. He had a famous videotape demonstration of all of it, and nothing from the windowing to nothing that anybody that came up, really anything after. It may be slicker, it may be more colorful, but basically everything we use today on computers, pretty much invented by this gentleman. And when he was at Xerox PARC's development system, and of course, Xerox famously had no idea what to do with it. They just thought it was cool, but I don't know how we could ever sell this. And of course, how many times does that happen where there's been something really cool or unintended and people just kind of went, nah. Of course, you can always look at the Post-it notes. And I think it took that guy 5 years to show everybody how great the Post-it notes were in his own company before they brought them out. But yeah, so much neat stuff. So many things. Okay, anything else going on in here? Not really. We've got a lot of movements in individual stocks, so why don't we go ahead and start getting into them. Going to talk to Tom about Tesla in the next hour, but Tesla showing a big truck out there, big semi, and we see Cummins down rather significantly with some decent volume today. Do I think this is way overblown? Yes. But in the short run, in the long run, I think there's a lot more to be said about what's going on as electrification of cars continues down the road. But like I said, I want to discuss that with Tom in the next hour. Foot Locker came out with some rather spectacular earnings in the fact that they are not going out of business. Almost everybody thought they were. This is the biggest day in 40 or 50 years for the stock price of Foot Locker. I had no idea that they were around that long. Apparently, they've been a public company for forever. But I think they changed their name a long time ago. Were they Buster Brown or something at one time? Anyway, we'll talk about this when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I forgot the Foot Locker was the old Woolworths. I had bought a Sinclair 1000. If anybody knows what those were, I actually used it as a doorstop. Many years later, I took my first one back because it had a problem. And then much later on, I think I bought one for $10 and as a political statement, used it as a doorstop. But it was one of those computers that didn't even have real keys. It had those kind of membrane keys that broke after not too long. But kind of an interesting PC. Didn't last that long. We were talking about Foot Locker. It's right up into the middle of its gap. Are things really getting that much better? No, they're just not getting worse. And this thing had, I don't know, about 4 or 5 days to cover on it. So again, as I said, going into earnings last couple of days, I just didn't see the merit of being short anything right now. Everybody is hopping on these stocks on earnings, thinking they're going to get blown away. And for the most part, they're just okay. The earnings are not that great. Things haven't really turned around. They just haven't gone even and gone even worse. And that's enough to pop a lot of these with way too many shorts going into earnings. There's another company that's in this same sector called HIBB is the symbol for it, but it's HIB. What is it? HIB. It'll come up here. I can't even remember now. HIB something. Hibbett Sports, that's what it is. Anyway, I've never been into one. I don't know if there are any around down here. Almost the exact same pattern in this. Big gap down back on the 24th of July, down on 7.7 million shares. Up today with 2.4 or 5 million shares. I don't think anything's really changing. But just like J.C. Penney and Macy's and the rest of these things, if you've got something you can sell, if you can close some stores, you can always get these things going for a while. They are the undead of stocks. I got to sneeze. Hey, I'm back here. I should have done it. I actually got my loop of the Kill Bill theme to play for the next time that I have to sneeze. And I'll do that next time while I'm sneezing, and then I'll come back out. But anyway, it is Hibbett Sports. They're back up here. They are looking kind of good. And of course, anytime this stuff does good, then you want to look at Nike. It's up about 3% in sympathy, back up to the highs. Now, the energy is only about the same as the way down on Nike. So this may still be in a consolidation. Certainly not as weak as the bounces of Hibbett and Foot Locker. The one downside is the stock on Williams Sonoma, and
Dive.
and yep, there were Tom didn't buy enough green paint in the world to hold this thing up all the way back down to the 24th of August gap up that had 6.8 million shares. You're down with 12. I think that tells you everything you need to know about the paint business for Williams Sonoma. 42.68 is the next level down. But that's really the only one that really had a bad day. Even some of the other clothes companies out there like Abercrombie and Fitch didn't do so bad. They popped back up. Now you wanted something in the neighborhood of 3 million shares in Abercrombie and Fitch, and you've got 14 million shares back up into these previous highs of December 8th of last year. If we go back a little bit farther, a sea of people that probably would want to get out for every dime higher. But again, nothing goes straight up, nothing goes straight down, and you've got to kind of take a look at it. Another one in the mall retail space that doesn't look as horrible as you'd think it would be the Gap. It's up a couple of bucks. This one needed 5 million shares. You got 13 million shares today. So again, like I said, I just wasn't a fan of being short into this earnings cycle. Way too many shorts. All they had to do is kind of come in line and see a huge squeeze out of these by the end of the day. And of course, I think I got a terse email yesterday because I started talking about why I thought Ross stores would be doing better and forgot to complete my idea. It's also up and might have enough volume to at least match the previous high of 69.52 back on November 22nd, 2016. Certainly above that price at the moment. But Ross Stores is a store that sells last year's goods at a discount price. And mine, a little favorite is Stein Mart, which is down here in Florida. But golf shirts that are very expensive can be, 25% if you just get last year's golf shirt. And I'm not a fashionista, so I don't really care. I just like buying a lot of golf shirts, if you haven't noticed. And Ross is the same kind of thing. If people aren't doing well in retail, even though a handful of them are, there's always a lot of extra product. And Ross comments were basically that they saw this fall a lot of sales for products that had kind of been in limbo, last year's products or last year's fashions this year. But that's what they need and what they haven't had for a while, which is a lot of product to sell, which means they can get it a little cheaper and bid it down and make a little higher margins in their store, but also have enough product. Okay. Everybody's making a joke. Also, another stock that had been beaten around fairly hard over the last year, looks like it may be turning around, is Splunk. This is a data mining company, but certainly a true breakout. It's only been around for a few years, but it is all-time highs. Data mining, if you don't know what this is you just take all your data and go, okay, I want you to give me some information that can help me do things. Amazon is the preeminent data miner. It knows what you're looking at. It gets search results from Google. It then pushes those things onto your page. When you go to Amazon, Google's the same thing. It looks at what you're looking at when you Google it and what you check for on YouTube. It puts all those things together and sells people that would be manufacturers of products you might buy your name and puts you at the top of the list because you've been looking at this stuff. A lot of companies haven't really started to get into this. I wondered if this company could do well. I was surprised. But again, is it really that big a deal? Do you think, I think you can probably buy this back in the mid to low 70s. And we'll talk more about that when we return.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Well, I feel like I should be on the nightly business news with that one. Anyway, looking at a few more. Anyway, Splunk. Keep an eye on this one because it is a valid breakout with valid volume. I'm going to have to dig into this one over the weekend. It was really a tough one to see. We talked about how data mining had been one of these things. I was actually kind of fairly bearish on this thing, but I'll have to dig in there and see whether this just too many people were short on this or this is a breakout. But if it comes back down on lighter volume, this may be one for next year if these guys have turned the corner on it. Another big one we talked about going into earnings was NetEase, the Chinese company. This one is also a valid breakout for the day, up with 5 million shares on 1.5 million shares on June 26th. This has blown pretty much right through it. Lots of juice to the upside. If you're playing Chinese stocks, got a valid breakout in that one. What else do we have out here? Got a lot of stuff. AMAT looked good, even though the NASDAQ is slightly down. What is it? Down to an odd change. Again, a spike out here. I don't think that I would have bought it. Now, this one actually did retrace everything that it popped to, $60.88. This one is the kind of one that you want to watch for on Monday. That is kind of one of those bearish things that should have stuck and has not. We're going to talk about this with Tom O'Brien at the bottom of next hour. But there are a few things going on out there that are kind of interesting in technology and that we will look at. But see, is there anything else I wanted to get to before I started looking at the usual suspects? Did I get to all the movers out here? I think I did. So let's go back and look at Apple. Apple continues to under deliver. It's missing a production goal on one of its new products. This thing not really down that much, but down a little. This thing has two gaps. I would probably like to see, let's go back here a little bit farther. Could this be the third gap in a third gap play? I've had some emails. Oh, you can email me too at path@tfnn.com. But is this a three gap play? And the answer might be yes. We'll go into detail about what's going on inside Apple, but that would be the third gap. In fact, let's do this. Zoom in here and let me get my tools. And we'll do this. The first gap is out here around 100. The second gap comes in there right at 125. And this third gap was the one on earnings right back here. Let me slide that to the side there. So you've got a fairly decent three gap play setup. It's come back into that position here in the last few days. If this thing does not rally, you've got some fairly deep moves. 158 is the first tiny gap. That'd be the first minor support area out here. And it's all whether or not they can manufacture the iPhone 10s in the quantity that they need. We already talked about Best Buy yesterday, taking a gainer down after it said, well, we don't have enough. They really didn't say it because I don't think they wanted to tick off Apple to an extent, but it gapped down 2 days ago. It basically another little dragonfly looking doji today on not much volume. My guess is that this will work itself before the end of the year back into around into 51, 61, which is the September 19th high. Maybe Apple starts delivering phones and this thing looks a little better, but my guess is that this is going to be a next year thing for it and the iPhone 10 dragging in business. Okay. Some question about a reversal in Microsoft MSFT. The question is, what would cause Microsoft to give it up out here? I don't see anything. Business is pretty good. There's not a lot of change going to be happening between now and the next earnings date. Hang on a second. So, you're down a little bit. Is there much volume? Not really. 82.24 is the low of the day out here. My guess is that you would, if you're thinking about buying this for a end of the year run, you're probably looking at about $80.75 to 81 bucks. I'd like to get it 80.50. I don't know if you're going to get it there, but 80.50 would probably be about right. Anybody short this thing would probably have to close before or would close their shorts before the end of the year. So that may be a nice run back up to the 86.20. Intel has some fairly good news out today about them getting into the smartphone business and maybe even being a supplier for Apple in the coming years. I suspect this one has one more gap to the upside coming in it. You've just come back and finished your filling of the gap today for Intel. And to tell you the truth, I'm not going to play this for a $2 move between now and the end of the year. But if you were thinking about holding Intel a little farther, a little longer, this is about the best I think you're going to get between now and the end of the year. 44.81 is the low today. So keep an eye on that. Fake book. Not much happening on this one after earnings. It's just kind of popped down and gone sideways. I don't know if there's anything in this other than it going sideways before the end of the year. And FLX, Netflix, on its move, of course, has just kind of gone sideways to a little down. These things are just kind of pulling back after earnings. But today you're down on to 2.5 million shares on this move back up on the 5th of October with 20 million shares and 19.5, we'll call it that. So you're pretty much at this 190 level, probably at some level of support. I suspect that that's kind of the lows are in for the year. Now the question is, how are you going to run anybody out of these stocks, and why I don't think that there's a lot of reasons to be short. The only reason is that you think that the Senate is going to blow up the tax bill, and so far they've been fairly good and what would you call it? Disciplined as far as that goes. They're even firing back a little bit. Well, Orrin Hatch gave the 12-gauge shotgun to one of the other big mouths in Congress. You don't see that much. So there's a little firing back, a little bit of, maybe a little bit of a spine developing in some of those senators. So we'll see how that develops. But I don't see a lot of weakness yet. And the move, or at least the margin in the House, gives them a little bit more margin room if they need to get that taken care of in consolidation. So I'm not really thinking that this is a down move. I'm thinking that if you're looking for a big move, it's probably going to be at the first of the year. Be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
And we are back. So Netflix, is there anything changing out here? No, not really. We'll keep an eye on it, but yeah, you're pretty much, what would that be, about 198? I think so. So you're looking about, 189. And what'd you get to the low of the day today? 192. So like 190, 190, 189 would be kind of support. That may be a part that you could buy and play. But again, I'm not going to buy a stock for a $5 move in a $190 stock. Between now and the end of the year, if you're going to hold it into next year, then I think maybe there are some opportunities here in this next week that we start looking at some of these. GPRO. GoPro was supposed to be saved by this 360-degree camera that they have. Man, you're just kind of bouncing up on a light volume here. I don't think anything's changed in GoPro. Would this be their last year? Maybe they got 18 months left. But I have a feeling that the worm will turn incredibly quickly for this one in the next year. There just doesn't seem to be anything that they can do that would be right. I wouldn't be short it. Things perpetually massively short. And it'll probably have a big bounce when they get rid of the CEO. And then maybe there's an opportunity there. The U.S. rig count, let's take a quick look at USO. The rig count rose again this week from Baker Hughes, up 8 to 915. See what else is out here. The oil rig count was unchanged at 738, while gas rigs rose by 8 to 177 to account for the entire increase in the overall count. So what we're seeing is, of course, that probably why we're up $1 today on crude. And, well, that does tell you something about natural gas, though, and that is that they're bringing on more supply. Up 4.5 cents on natural gas today. But that's the easiest thing in the world to add right now is supply. There are a lot of wells sitting around. We're going to go to Dano in Clearwater. Dano?
Hey, Dave.
Hey.
Happy Friday.
Happy Friday it is.
That's right. Hey, I'm looking at FireEye and looking at it, playing it between these gaps here. Looking for maybe like a 10% pop.
Hang on a second. Okay, so you've gotten down to this gap. You're sitting on top of it. What do you have back here? Okay, May 3rd, you had 31 million shares. You're back into it with 3. So you're probably sitting on fairly decent support. This thing kind of came down along with the rest of them because there was a bill passed. I think it's already been signed that basically gives the heads of companies a big pass when they get hacked. They really can't get sued as much because they have to be forced into arbitration first. And that's really kind of put a big weight on FireEye. My theory has always been that these companies will take off to the moon and beyond as soon as insurance companies will no longer carry the downside on these things. The arbitration deal makes it much harder. But this is the equivalent of the CCD system in the convenience store where you get your gas and go inside. And, of course, they're always getting robbed. No one wanted to spend the money for a CCD system until the insurance company said we're no longer going to insure you if you don't have a working closed circuit television system. Right. I think that's going to happen in these, and that's where the big move is going to happen because this stuff is not cheap, and everybody kind of looks at it just like the way the convenience store owners did, and that was, well, I'm not going to pay a dime for anything that I don't have to have. But that changed in the 90s. What's your question above that?
Well, yeah, I'm just looking really just kind of a short trade. Looking at this thing, maybe going back up to the bottom of the gap it just created a while back.
Just about 15 and a quarter.
Yeah, right around the $15 mark. Because I found this off of my scan whenever I ran my scan on my short.
Yeah, no, I like the fact that it's at support. I would wish that the news cycle was with it a little bit more. Hang on a second. Let's see. What I'm looking for are stocks that kind of built up a short position. And, you're not bad out here. 17%, 13%, 17%. Yesterday, 14% of the shares short. Could be a little higher.
Right.
I wouldn't mind. When are you thinking of buying it?
Probably looking at Monday morning.
I would say that'd be it. I don't see any reason to buy it today.
Right.
Certainly a business that is going to do well one day. The question is just when, and is it going to take some kind of legislation to force these guys to buy it? I think you're okay.
My window might be a couple of weeks.
I think all this stuff, unless you're planning on holding it for a year, I think somewhere between the 15th and 18th of December is probably, you're going to get 99% of your returns by then.
Right.
If this market does creep up, there's no reason probably to hold it through that. I think the 18th of next month is triple witching. Is it next month? Yeah. Let's see, what do I got here? December. No, it's 15th. Is triple witching. So, if I've got some stuff, I'd like to hold it through the 14th and probably sell it on that date that I think it's just going to continue to creep higher on short covering and news. So that's kind of my game plan at the moment.
Kind of what I'm looking at on this one too. So.
Yeah, I think you're okay. If you could get this thing any closer to 1340, I'd like that.
Right.
But you might get that on Monday. You might get a little pushed down. The only thing that kind of has got me, the only thing in the whole market the last week that really has me kind of scratching my head is that AMAT. And if there's just one stock like that, there's not a lot. Certainly in the semi part, though, that is kind of troubling. But I don't, this is in the NASDAQ, so you get a little bit of that, but not as bad as if you were in the semis. So I'll just see if there's any cross-contamination Monday or Tuesday into the semis, but that's about it. So, yeah, I like the trade. It's got enough shorts. I wish it had more. But yeah, if you can get 1360 to 1510, 1525, I think that's a good trade for the end of the year.
All right. Very cool. Hey, I appreciate it. Have a great weekend.
You too.
All right. Bye.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Hi folks, this is Tom O'Brien. Come join me next hour as we bisect and dissect these markets. Right here on TFNN. Wow!
As you said, a lot of these things looking kind of interesting. AMAT is the only thing flashing a warning signal, so we'll want to follow up on that one on Monday. And of course, let's take a quick look as we end up the day on Amazon. Kind of interesting. Yeah, you got a little bit of cover here today, but pretty light volume so far. Just 1.6 million shares compared to the 2.2 million shares yesterday. You'd certainly, if you want to go long this thing, you're probably still looking to pull back to 1040 on it. And but that's probably going to happen after Christmas. Kind of hard to think that the biggest retailer that there's going to be this Christmas is going to have any real significant problems. See if there was anything else. IBM, wanted to check back in on this after Mr. Buffett had continued selling, and you kind of got the bottom of that selling news this week at 146.21. It's bounced for a couple of days. Is anything really going to change on this? No. Is 146 support? Man, that would be tough. I still think this one has maybe 6 months or a year to go sideways before any new products could actually bail them out. So you might have to accept the heat all the way down to 140. I just don't understand probably investing in a company that I think you probably can make a fairly educated guess is not going to turn much around until after the 6 months or a year with some new products that they have. So I don't know on that, John. Actually, I got an email. Don't know on IBM, John, that there would be anything that I would be interested in this thing. Could it turn around? I think it can. We talked about some of the products, but man, they are way down the line. In the meantime, sell when you can, not when you have to, and I'll see you here in just about 30 minutes with Tom O'Brien. And if not, Monday. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.